put that website together, and the business began to grow. And in 2002,
When it comes to personal and business finance, the primary difference lies in the sources of income. Personal finance revolves around the money you earn as an individual, typically through a job, investments, or other personal ventures. These income sources are usually stable and predictable, depending on your salary, interest, dividends, or side businesses. For individuals, managing income effectively is key to budgeting and planning for long-term goals like saving for retirement, buying a home, or funding education. On the other hand, business finance involves income generated through a company or business entity. This can come from sales, services rendered, investments, or even partnerships. Unlike personal income, business income can be highly variable and affected by external factors such as market conditions, competition, or consumer demand. The goal of business income is not just survival, but growth, allowing the company to reinvest in its operations, expand its offerings, or increase profitability. For a business, it's crucial to track various streams of income, ensuring they are diversified and sustainable. This helps in managing cash flow, which is vital for covering operational costs and ensuring the company remains profitable over time. Unlike personal finance, where the focus is more on saving and growing wealth for personal security, business finance focuses on generating wealth for the business's success and future growth. Expense management is another key area where personal and business finance differ. In personal finance, expenses typically include daily living costs such as rent, utilities, food, insurance, and transportation. These expenses are often fixed or predictable, but can also vary based on lifestyle choices, emergency situations, or unexpected costs like medical bills. Managing personal expenses involves creating a budget that ensures you're living within your means, while also planning for savings and long-term financial goals. For businesses, expense management is far more complex. Businesses have to deal with a wide range of costs, from operational expenses such as rent, salaries, and utilities, to production costs like raw materials, equipment, and distribution. Additionally, businesses often face fluctuating costs due to market changes, employee turnover, or fluctuations in demand for their products or services. Business expenses also include strategic costs such as research and development, marketing, and expansion efforts. While personal finance typically focuses on cutting costs to save money, businesses must invest in their expenses to ensure growth. Proper expense management in business involves finding the right balance between spending on essential needs and investing in growth opportunities. It also requires monitoring expenses against income to ensure profitability. Effective expense management is critical for the survival of both personal and business finances, but is more dynamic and complex in business finance. Risk is an inherent part of both personal and business finance, but the types and levels of risk differ significantly. In personal finance, the primary risks include job loss, unexpected medical expenses, market volatility, and inflation. These risks can directly affect an individual's income, savings, and investments. Personal financial planning focuses on mitigating these risks through strategies like building an emergency fund, diversifying investments, getting insurance, and setting up retirement accounts. The goal is to protect personal assets and ensure financial security, even in the face of unexpected events. For businesses, the range of risk factors is much broader and often more complex. Business risk includes factors like market competition, changes in industry regulations, supply chain disruptions, and changes in consumer preferences. A business is also at risk from operational challenges such as employee turnover, technological failures, or poor management decisions. Unlike personal finance, business finance often deals with larger-scale risks that could potentially result in bankruptcy or a significant decline in profits if not properly managed. Moreover, businesses also take on financial risks through decisions like leveraging debt, investing in new projects, or entering new markets. These risks are calculated with the expectation that they will lead to higher returns in the long term. Personal finance, on the other hand, tends to emphasize risk avoidance and stability. Risk management for businesses involves sophisticated strategies, including forecasting, hedging, insurance, and risk diversification to ensure that the business remains resilient in the face of uncertainty. Tax implications. When it comes to taxes, personal and business finance face different rules and structures. In personal finance, individuals are taxed based on their income level, with the tax system generally being progressive, meaning that higher earnings are taxed at higher rates. Personal income tax is typically straightforward, and individuals are responsible for reporting their earnings, including salary, freelance income, interest, and dividends. Many people can take advantage of standard deductions, exemptions, and credits to reduce their taxable income, ensuring they pay the least amount of tax possible. On the business side, taxes become more complex. Businesses can be subject to a variety of taxes, including income tax, payroll tax, sales tax, and property tax, depending on their structure and location. Unlike individuals, businesses have the ability to deduct certain expenses from their taxable income, such as costs related to operations, wages, rent, and even research and development. These deductions can reduce the overall tax burden on the business, allowing for more capital to be reinvested back into operations or growth. Moreover, businesses often face different tax rates depending on their legal structure. For example, a corporation might face corporate tax rates, while an LLC or sole proprietorship may be taxed as a pass-through entity, meaning the business income is reported on the owner's personal tax returns. Managing taxes in business finance requires careful planning and compliance with tax laws, and businesses often hire accountants or tax professionals to ensure they are minimizing taxes while staying within legal boundaries. In summary, while personal finance focuses on reducing tax liabilities through credits and deductions, business finance involves strategic tax planning to ensure tax efficiency, minimize liabilities, and ensure compliance with the complex tax code. Financial goals are essential to both personal and business finance, but the focus and approach to achieving them vary greatly. In personal finance, individuals often have goals like saving for retirement, purchasing a home, funding children's education, or creating an emergency fund. These goals are typically long-term and involve careful planning, budgeting, and consistent saving. Personal finance focuses on achieving financial security and stability over time, with an emphasis on controlling expenses, building wealth, and preparing for future financial needs. In contrast, business finance focuses on goals that aim to grow and sustain the business. Common business financial goals include increasing revenue, expanding market share, improving profitability, or launching new products or services. Businesses may also set specific targets for cash flow, debt reduction, or operational efficiency. These goals are often more dynamic and may require significant investments, scaling efforts, and the ability to take on risks in pursuit of growth. While personal financial goals tend to be more about safeguarding an individual's future, business financial goals are about maximizing profitability, ensuring competitive advantage, and positioning the business for long-term success. Businesses must regularly assess and adjust their financial goals based on performance, market conditions, and emerging opportunities. In personal finance, on the other hand, the goals tend to remain relatively stable, with an ongoing focus on wealth preservation and gradual growth. Achieving financial goals in both contexts requires discipline, strategy, and a willingness to make decisions that will shape the future. However, the difference lies in the scope. Personal finance is about building a secure and comfortable life, while business finance is about growing an enterprise to its maximum potential.